U.S. stocks and one popular measure of volatility on Wall Street have been moving in lockstep lately, and some market experts think this is an ominous sign. The problem? The CBOE Volatility Index, or the VIX, was producing even better returns, up 15% for the week and 7.5% in August, as the S&P 500 and the Nasdaq have mostly put in repeated records over the past several sessions. This isn't supposed to happen because the VIX tends to fall as stocks rise. So, is a rising stock market along with a rising VIX the prelude to a market crash? Let's take a look. Independent market technician Mark Newton pointed out that the last time the VIX and the S&P 500 trended together was back in mid-January, just before equity benchmarks proceeded to unravel in early February after topping out on January 26. The Dow and the S&P 500 fell into correction on February 8th. According to Newton, yet again we're seeing positive 10-day correlation between the VIX and the S&P 500, and the last time this occurred was in mid-January of this year, directly preceding the sell-off. This chart here shows the 10-day correlation against the S&P 500's advances. To be sure, there are a number of factors that might help foster such a dynamic. For one, September tends to be one of the worst performing months for stocks, so investors could be buying protection. There are also any number of outstanding risk factors that could roil the markets. Those include fears about a spillover effect from the troubled currencies in Turkey and Argentina, a break for Britain out of the European Union or Brexit, the fiscal calamity in Italy, and disruptive actions in trade between the U.S. and its international partners. And that's just to name a few. Of course, current momentum appears to be mostly to the upside, and the market has demonstrated an uncanny measure of resilience. So now let's take a closer look. This is the 20-year monthly chart on the VIX, and as we take a closer look at this, if you can see, before each spike, we had a move up such as here, such as there, going back here, and then, of course, right back here before the great financial crisis. Now, subsequent to the spikes in the VIX, we had a calming period, such as here, moving through there, and as well as in here. So just simply based on this chart, in my opinion, we are still in the calming phase, such as in here. So that to me is not indicating that we're ready for another spike. But let's go through some of the oscillators here. In the MACD, we see that the fast line is just about to move through the slow line. So again, once the fast line moves through the slow line, there's a calming period such as there, here, all the way through there, and here. Now in this area here, this indicates that there may be a possibility of the fast line moving on down and reflecting back on up to a spike in the VIX, might even move through and then spike back up here, such as in this frame. But in my opinion, the greater probabilities are that we're calming down, and that's shown here. We're heading on down in the histogram, moving into the price rate of change. This here indicates the possibility of a little spike. It's possible there, and we've seen it a few times through here, and in here, and then through here too. So there is a possibility of a small spike. Relative strength is now down below 50, indicating that the VIX is weakening, in my opinion. Into the stochastic, again, the fast line has moved through the slow line and is heading on down, and it's just calming. The Williams, to me, also shows that we're in this lower portion of the chart where, in my opinion, things are more calm. So I'm not going to say that the probability is that we're going to have a spike. I think the greater probability by the monthly chart is that we are in a calming portion of the market and it's not time for another spike yet. But now let's go take an even closer look at the weekly chart. By viewing the weekly chart, it's possible that the VIX might have already consolidated in this time frame here and might have a possibility of a spike. We can take a look at some consolidation in previous times, and it looks like that all the way through here. And it is interesting to note that even with these spikes up here, the general market was calming down for the most part until early this year. So right now, it looks to me that things are continuing to calm down. It's possible that we could spike, but I think the greater probability is that we have a little bit more consolidation time. And looking here at the MAC, the fast line is right here, consolidating, has not moved up through the slow line yet. And in times past, when it has moved up through the slow line, there's been a little period of a few months before it started to perk again, such as there, such as in here, maybe this somewhat. Now this one was a real quick consolidation and spike. This was another quick consolidation and spike, and this was another quick consolidation and spike. So it is all possible that a spike can happen here. I'm just saying that the greater probability, in my humble opinion, is that we're still calming down. Here, we're still moving on up from a relatively deep position. Up here, we're not yet to the zero line, and oftentimes when it hits the zero line and goes above, that's when the fireworks happen, such as here, back there, there, and into here and here. You get the idea. Moving on down here into the price rate of change, the fast line has moved above the slow line. We're still below zero though, so it's a little weak, but it is moving on up. And I think that's what the article is indicating. Things are strengthening. And as we see here, a nice little consolidation. We're still below the 50 line, but heading on up. So there can always be a little percolation here with a spike. Very possible. Stochastics, we're still pretty far down here in this territory in the lower portion of the chart, but that doesn't mean a spike can't occur, as you can see in previous periods. Moving on down here to the Williams, and the Williams is heading on up, so it's possible that things could continue. So by the weekly chart, we've got a pretty mixed indication. So let's go now to the daily chart. This is the 1-year daily chart on the VIX, and let's go back here into early this year and see what happened. We had this level here. It then stepped up to that level there, and then this third step right before the big spike. Now, coming here to a present time frame, in early August, we had this level here, and then by late August, we have this level here, second level. So is it possible that we can spike from here? Absolutely. Is it probable? I don't think the probabilities are there yet, but I think we are getting closer. Moving here into the MACD, you can see the same sort of thing, that we have moved on up from a lower position in the chart, heading on up to that zero. And you go look here at this time frame here, we fast line crossed on through the slow line, went sideways, and hit a couple of levels before it spiked. So I think we're a little further away from a spike, at least a spike that was as large as what we had in early February of this year. It's always possible to have another small spike, such as in here, or maybe even in here. But a big spike, I think we haven't built the foundation for that yet. Moving here into the histogram, you see it's just pretty calm here. Nothing is really percolating for me on the daily yet. And the price rate of change kind of going sideways as it had previously. Relative strength, much the same. And then the stochastics were under the 50 line here, going back into early this year, perhaps late last year. Again, here's where we were there, and then early January, and then finally here, and then the ultimate spike. So we do have a move on up in these bottoms, slightly higher lows. So we could be building into something, but I don't think it's on the horizon just as of yet. Back here to the price chart, I think we have more of a foundation to build, and I think more criteria needs to be set before we do have a spike similar to what we had in early this year. It's always, again, possible to have another moderate spike, something that can roil the markets for a little bit. But as for a correction to a bear market or a crash, that kind of spike in the VIX isn't quite there yet. We need to see some more evolution in the chart. So for today, that's ChewDog Charts. Thank you.